I think this is a pretty appropriate song, don't you think? Under Pressure, David Bowie. Anyway, Andrew Horowitz here. How are you? It is Friday, October 1st, the beginning of the month, starting off the last quarter of the year 2021. And this is the TriggerCharts pre-market rundown. We are talking about markets, what's moving things, what are the backbone of what is happening and the reasons why. But more importantly, we're really discussing some of the important aspects of technical analysis as we utilize our indicators that are available on the TradeStation trading app store to provide you with really good decision-making tools, things that will help you, give you confidence in trading. And, you know, if you think about it just for a second, confidence is really an important feature of trading, because if you don't have confidence in the trade, you're going to be blown out pretty easily, right? You probably all had that experience. And when we look at this and we look at the idea of the market profile, this is all based on the indicators that we utilize, there is something to be said about the knowledge that the information that I am getting is the meat of the markets. The fact that we are finding areas of interest, areas of support, resistance, very simply put on a chart, a lot of very complex and complicated indicators in the background of being calculated, but laying it out in a way that's pretty easy to figure out. And while it is not always necessarily an absolute slam dunk, you have a lot more confidence understanding how it is built. And that is based on volume, and volume at a particular price, where there are indications of interest, buying interest by institutions, by individuals, by hedge funds, by pension funds. We see a footprint of where they are putting their money to work and where they have not put their money to work, which is probably a much more important area. Before we go any further, I want to mention that investing, of course, involves substantial risk. Past performance is not indicative of future results. And of course, as with any investing, you can lose capital and your original capital. This is for educational purposes only, and always use your best judgment when investing. So as we do each and every week, we give you an opportunity to ask me about any particular stocks or symbols that you want to look at. We start off on Friday looking at the futures. And I got to tell you something, big change from where we were earlier in the evening. I was up at about 4:30, 5 o'clock. Futures were down on the Dow about 150 points. And we saw the same thing across the NASDAQ and the S&P 500. And what happened was a couple of different things. First of all, a little bit of exhaustion, probably the start of the month, and a news alert from Merck that showed that there was some promise to a new pill that they just got through with some of their testing, now looking for emergency use authorization to provide for a therapy for COVID that reduces down hospitalization deaths by 50%. That's big news. I think that, on top of some of the other catalysts that are going on, again, beginning of the month, pension funds putting money in, the fact that we got to a point that we're seeing some very, very substantial selling. Yields ticked lower a little bit today from where they were on that breakneck pace higher. So I think what is going on right now is a bit of a knee-jerk reaction in the area of, hey, you know what? Let's get in. It looks like a bargain. We had our 5% sell-off. Ring the register on that, and let's move on. Themes for the week. I think we got to say that, nothing surprises anymore. We have the debt ceiling standoff that happens, and of course there was a signage of a stopgap bill that was done by President Biden after Congress presented it to him yesterday. And now we have a few more months of this shenanigans that will go on, the idea of kind of negotiating back and forth of what's going to be there. And now we're going to have probably another round of the same debt ceiling standoff in a couple of months. So that's not really that exciting, to be honest. And then what we have is, Congress in general, where nothing is done. I mean, I've been around a long time. You've been around a long time. I think we all can agree on something that they can't agree on anything. And it's only gotten worse over the last number of years. The hatred for each other's party and principles and ideals has gotten to a point that there is no way that anything can get done. And in fact, there are some theories that, just don't invest when Congress is in session. And just when they're out of session is a better time. There's been some studies on that. Pretty interesting. Retail stocks been plunging. There's been this whole idea, the consumer's back. We have backlogs and we have people buying and we can't get things. And one of the things that's happening now is it's gotten so severe with regard to the supply chain that there are goods that are just not available. Those goods that are not available are hurting. In fact, we saw a report from Kohl's yesterday that really just killed the retailers. Gap, Ross stores went down. There was a story about how Vietnam is having lockdowns, which we know about, where factories are closed, which we know about. And if you do want to work in Vietnam due to COVID, you have to actually live at the factory. No kidding. So people that do want to work and make a living have to decide to live at the factory with no exposure to their families, etc. The problem is that the closures are causing a major problem in the area of goods. And in particular, Vietnam has been producing a significant amount of clothing lately, more so than China, as we moved a lot of the manufacturing there because of pricing. And now what we have is a situation where this COVID lockdowns are causing a major supply constraint, and companies are starting to say, hey, we have problems. Sherwin-Williams came out this week. We saw Nike, what happened there. And there's a lot of issue with not only pricing, because we do have inflation. Let's not even get into that conversation. And the second point is that we have supply chain issues. And then on top of that, we saw some really weird things happening with energy. Like we're seeing that, 30% of the gas stations in England, and I think it was as high as maybe 50 or 60%, were running dry gasoline due to a driver shortage. All of a sudden, there's a driver shortage. Again, weird things happening. Natural gas prices going to the roof, then coming back down. Coal prices all-time high, or decades high. So, that's with China shutting down again, trying to meet their climate goals for 2021, and coal prices go up. It's a very bizarre atmosphere right now, but I think that theme of nothing surprises really goes well. Energy, we saw crude prices, the target now $80 to $90. I'm seeing some again talking about outside of, hey, maybe $200 in the next couple of years. We saw this before to bring you back to where we were back in 2007 and that whole rally that we saw, 2008, and then I think even 2010, after we saw that plunge, there was this, somewhere in that range, this idea of Goldman putting a price tag of $200 on crude and talking about peak crude, where we're going to see this incredible surge. The problem is demand's not there. All this is about supply and the constraints that are put upon us by Saudi Arabia and the slowdown of the drilling here due to a variety of different reasons, not the least being the fact that the current administration is trying to obviously get rid of non-clean fuels. Coal, I mentioned parabolic, outside target of natural gas, $12. With all this going on, I thought we'd have a quick poll this morning. And with what we've seen over the last week with the major move lower of equities and what we saw with some stocks, I thought, hey, you know what? Let's take a look and ask the question, buy, sell, or hold. Are you buying, selling, holding, totally shell-shocked, or trading? That's the question. Do that. It should have popped up on your screen. Look for that on your screen right now. We'll give that a couple of minutes as we talk about the next issue, which is congressional games, and we'll kind of give you the results of that poll in a second. So it's a very tough market right now. When Congress is making meaningful decisions and they're going through the sausage factory with their bills, you have to wonder, what can we do about this? And the problem is the back and forth, and every single Congress person or senator, politician trying to take the limelight. It causes a problem. They're going to give you all sorts of information in between sessions, coming out and trying to find the cameras and the lights and make some kind of comment. It makes it very difficult for markets. So I think that when we look at the overall situation with regard to where we are, it's a tough time because we're going to see a lot of volatility, and we did see the VIX spike up to about 25 again yesterday. The stimulus that we may be getting or may not be getting comes with some risk, the risk of further inflation, further bubbles being formed, and the possibility of tax hikes. We don't know what's going to happen and if that's going to actually make it through, whether it's going to be a tax on capital gains, whether it's going to be a tax on dividend reinvestment that change, whether it's going to be a tax on when companies do share buybacks. There's some talk about that happening. Tax on the estates. I mean, it's a lot of different things and a lot of moving parts right here that we don't really have a lot of detail on. But what's happening is that we're being thrown little tidbits, and that is very concerning for a lot of people. So the other thing is that right now what we have is a framework versus a policy. Don't get that confused when the Congress starts talking about we have a framework, which means they have nothing. When they talk about we've agreed on a framework, that could just be that, hey, we're going to be voting in 3 days. That's their framework, without a bill underlying it, without the actual text. So recognize the words that they used in political circles to try to make things look like they're making progress when in fact they're not. And framework is one of those words that I've seen many times that means that really nothing is happening very significantly. All right, let's take a second and look at the poll. We'll close that poll. And the question of buy, sell, or hold. Are you buying, selling, holding today totally shell-shocked or trading? Good news. 0% said totally shell-shocked. We have 8% of people say they're buying. 17% said they're selling. I should have probably added shorting as something, but we'll utilize that 17% of selling and shorting is the same. Holding is 50% and trading is 25%. I would have thought we'd see a little bit higher level of trading there, but that's good. Probably a mix and some buying, selling. It could be a lot of the, we should probably have an all of the above too, right? Where we're holding a few things that we really like long term, maybe adding to those positions on the dips that may meet our support levels, maybe selling some positions that we're a little bit finding weak that are not holding up, and so there could be an all of the above. I think probably everybody agrees with that a little bit. Yeah, I can see you shaking your heads. Yes, very good. Yeah. Over on this zone over here, I'm going to mention that, of course. Let me kind of put this over here. That you can, of course, check out all the great tutorials and videos and things of that nature, overviews of all of the indicators that we talk about. We're the number one overall highest rated in the trading app store. I want to make sure everybody is clear about that. I'll also mention that if anybody's listening and you did not already subscribe to the Commander series, which is the 4 different indicator bundle that we have available on the trading app store. And if you do, and if you're ready to go and you subscribe, not a trial, not a free trial, but a subscription, we will give you a 3-hour coaching session that you do at your leisure. We'll give you the keys to that. Where you can watch the videos and go through all of the training. So make sure to send an email to support@TriggerCharts.com. All right, finally, a couple of things over here. We got headwinds and tailwinds. Of course, leverage is being removed from the markets. We see that almost on a daily basis. That got a little bit out of hand into the September time period with that big move up in September. We need possibly to be considering the fact that the economy is slowing. And it's not necessarily going to come to a halt, clearly. But, from that breakneck speed and that pace that we saw over the last year of that reopening trade, the concept of the economy is coming back because, well, people are coming out of their houses, and that should be something to really look for. And comparatively, there was a significant move to the upside when it comes to the differential, what we saw during the lockdowns and what we saw during the reopen. I don't think anybody could say otherwise. But now we're starting to see the potential for the economy slowing down, getting back into a normalized gear. The stimulus is wearing off. The people have what they need. They're back to work. The extra payments that are out there for various unemployment compensation or PPP programs kind of, gone. So, when we have that, the move, if people are going to move from, let's say, the city centers out to the burbs, well, they may have done that already, or they may have at least bought or put put something on a house. Now, there's still a backlog in that area because many of the home builders can't get all the materials, but there's still a backlog there. That shouldn't be too much of a problem. But however, you look out 6 to 12 months, and with a rising interest rate environment, what does that do to housing prices? So there's a lot that's going on under the surface with the economy. And then finally, one thing that we need to look at could be a headwind or a tailwind. Earnings season. Earnings season is coming up in the middle to end of this month. I think we start with the banks in the third week of October. And one of the things you need to know about what's going on there is that we're already seeing markdowns from analysts about quarterly earnings. Again, we've seen a lot of warnings. And we've seen it from many companies that are in the retail area, direct to the public. Again, Nike is seeing some softness, and the department stores and retail. So Bed Bath & Beyond had a miserable number yesterday, an outlook that was awful. And one of the components inside of that that's really a problem is the fact that their margins are seeing contraction. And the reason for that is, of course, their prices are going up. So I don't think there's any kind of mystery at what's happening in terms of inflation. We all saw it. We all knew it. It's here, even though we're being told otherwise by the Fed. The good news about the earnings season markdowns is the fact that we are seeing that it's an easier bar for companies to kind of make that hurdle over. So that's kind of a benefit in a way, rather than having the earnings ratchet up into earnings season. A couple of quick other things. Obviously, tech, we saw the September swoon. Facebook does need to be on watch. There's a lot of things that are going on there. They did acquiesce and finally tell us that they are getting hurt significantly by Apple's new privacy rules that they just put out in their latest OS and new phones. It's kind of a make it or break it market right now. Looking to the right, you'll see that we drew this line in, and I'll circle this. I think it's really important to look at this. Last week, we drew this 360 line in, right? We looked at kind of this area right about here as something to consider. Held for a couple of days on the downside, broke down, but what did it do? It got right down to our very low support when we kind of start tracking back. The problem is here, there's just not a lot of support. Now, there is support from the theory that tech is a great investment, great opportunity long term. But the problem is that when we look at this, there really isn't a lot of, I would say, areas that I would say, wow, that's solid. We broke through there. That was right up here. That was about the 364 range, possibly even up here at 370. Well, we're right below that. So, we're off by about 30 points. Let's see, 379 to 3. Yeah, so we're about 30 points, about 8% off the high on the Qs right now, and holding up a bit in the morning session. I would expect that that's going to be tested and throw a curveball. I do think we'll probably see a bounce to the upside, even after some very significant moves probably on the open today. I think that there is a little bit of sellers kind of, for the last few days, they really hit it hard. But where is that next support level? It's very hard to pitch. 357.02. Right now, we're at about 358.85, up a little bit for the day, but still, this is okay, this level. There's just not a lot of support. Really, this island below it at 350s is the next level. Just something to look at. What we're going to look at next week, the Case-Shiller Home Index was up 19% for the week. GDP came in right at about 6.7%. PC prices were a bit hot. That was an issue this week, 6.1% year over year. University of Michigan final. We saw some of our numbers in terms of the confidence numbers lagging a bit. So here's some of the stocks we're going to be talking about on the bottom as well. So there you go. Let's take a look at a few stocks again. Put your stock symbols here. I'm going to put a note right there. Put them right there, and we're going to talk about a few of these. Let's go look at the KRI for where we are. I find this really interesting that the KRI itself is in equilibrium. The problem is you would have hoped this had been kind of on the oversold at this point. That gives me some pause when it comes to where we are. Market's in equilibrium, whether you're in an uptrend or a downtrend. You read this, it says the overall market is measured by the key reversal indicator algorithm is currently not overheated or oversold. But the second part is where I think it's important. The market is currently in equilibrium, meaning that the current shorter-term trend should continue as the KRI values indicate a period of overheating or oversold. So until they reach that. So the short-term trend is down. So right now we're in equilibrium, meaning neither side really has the benefit. It's not overdone, oversold, overbought. That's a concerning factor to me, just to let you know. Let's take a look at a few things, starting with RH. This is interesting. This is RH, which is a company that could be consolidating significantly. Look on the daily here, and let's kind of enable a few studies here. Let's look at the radar and see where we are. Yeah, we have a big fat radar, a very normalized big D. See that big D? Maybe I can draw this for you. I look at these. I like to draw a certain. See, that's a big D versus a big B. See this one right here? B. You can draw that. This is not exactly, but I'll exaggerate this. This is a little d. This is a long, top heavy, bottom heavy, big B. They all tell us something different. You know, we have a situation, for example, like we see here on this one with, this range right here. I'll just color it in right there. There's nothing there. My concern right now is with RH, if in fact you get a level and a break of 656, you could really see this downside move very significantly back down to about 630. Very expensive stock. I know, I get it, I understand. But these are the things you want to look at opportunistically, why we see this stock that has gone parabolically from 100 back in April of 2020. And even if we don't look at it that way, let's kind of say, okay, forget all that. Let's just look at 2021, 429 to 730 on the top end. I mean, I think that when we look at this and we realize that where do they get their goods from? And remember we talked about with China, we talked about the fact that China is a big issue right now. China and Vietnam, are seeing a lot of slowing in the manufacturing, production, and the delivery. I mean, the ships are backed up, the ports are closed. You look at that, you look at a company like Wayfair, similar situation here. Wayfair did break down. Okay, this is an area we identified some time ago. This kind of real move, a slick move higher than down. This is a thinner traded stock. It did hop up to about 340. We've seen this also move from the lows of about $23 up to the high about 350. Again, we take that out and we look at where we were in 21. We started the year at about 233, currently trading at about 255. Does anybody think that the continuation of the furniture trend of stay at home is there? And that's what really was big about Wayfair, where you're going to building your home and buying all this furniture and maybe buying an extra desk and an easy chair for your office now that you are working from home. The kind of people have a lot of that already. So something to be looking at, and of course, where they get their materials from as well. This was an unmitigated disaster. This is one of those meme stocks that was in the pile. You know, we had the BBBY or Bed Bath & Beyond, or Bed Bath & Almost Bankrupt, either one. You want to look at it? You have the Build-A-Bear. You have BlackBerry, a lot of B's in here. You have GameStop and AMC. This was one of them, and there's all excitement. Things were going to, Bed Bath & Beyond is going to be amazing. Well, think about who competes with them. I mean, they're putting right up against Amazon. Let's see what Williams Sonoma looks like. It's still doing pretty well. Dropped off a cliff a little bit over the last couple of days, actually yesterday, when that news came at 195. I mean, this was just an amazing story that people were cooking at home and they were buying things that they normally didn't. Yeah, pretty interesting. I just took that off. Interesting. I just took my study off and I deleted it by accident. So what do is you go enable studies. It's not there. So I'm going to right click. I'm going to say studies and study. Maybe. It's down here somewhere. We got a lot of extra studies on here. So what I may do is, which one did I lose? I lost not my autopilot, I lost my altimeter. That's what I lost. I took out the altimeter. So you're going to see real time altimeter here. There it is. Back on. That's how it's easy as to put on an indicator or add it to a chart. Obviously, Williams Sonoma is holding. Look at that magical support. You would have known this. You would have said, maybe there's something to buy at this level. But at the same time, you have a pretty wide gap here to 162. I would say that, about the 166 range looks a little sharp for me. We'll kind of put that in there. an area that is of interest. Toast, this is an IPO that came out. I don't know if you know about this. I happen to know a little bit about the technology, the company. Great point of service. Came out too hot after the IPO, dropping way down. It seems to hold about this 50 range. I'd like to see this kind of come up above where that dropped off from yesterday, the 52.5. A little bit of a bump in the markets here. Cook Traeger, another recent IPO, drove up really well. This is one of the things you want to look at. I like Traeger. I like the company. They could be also having problems due to the supply chain issues. This is what you want to look at from an aspect of when you're looking at these particular types of IPOs. You know, you see this big move up and then kind of down, this level off, and a leg down. We'll call it here. What you want to see next, is the potential for this to start moving up above here, and this is kind of your line right here. Okay, it looks like Florida I just drew there, and that would mean I would be right here. But you know, this line right here, this is where you want to look at this whole mess that's right there. If you can get over that line, you have that opportunity to fly higher on this. That is a pretty pathetic looking drawing. But, you know, again, over the top of this area right about here is kind of the area you want to see. And then, you know, from there, that kind of range, if you can see that, you may have the next move higher. I like to look at that in those terms. UNG down about 2.5% today. Interesting to try to short or go long this. It's pretty much impossible. Not sure what's exactly driving this. To all-time highs, went from 11 to 20, doubled in the last couple of months, down about 2.5%. This is there's also Boyle, which is a two-timer, down about 4.5% today, about $3. Silver does nothing to please anybody these days, even though we have an inflation outlook, etc. Did pop up yesterday, is up a little bit today, not holding any support at all. Cardinal Health, I don't know what is going on here with Cardinal Health. Looking pretty awful, actually. I kind of even scoot this out a little more. Cardinal Health, somebody's asking us about it in the chat. I mean, I think 48.62. I'm not exactly sure what happened there on this particular stock. Must have been some earnings or something going on there. Could be supply chain also for them. Is that what it is? They're paying off the opioid settlement? Oh, that's interesting. Hey, get that out of the way. It's actually a good thing. Very choppy, though. Look at these moves. Very choppy. This is not a chart of a stock that I really want to look at. My concern is there's just a lot of gaps and holes, and there's no consistency. SPCE, we've looked at this. Double tops on this. Still in a consolidation mode. They got the approval to fly again after they were grounded for a little while. And still a lot of overhead here, something we've looked at many times. Tesla, really doing a very nice job of recapturing some of their levels, consolidating here. A little bit of a flag pattern, we'll call it here, consolidation pattern. Let's click here. That we're seeing right here in the last number of days. And actually doing really well in a, so you got this, you got this, you got this. Doing very well in the last few days, considering the markets of what they've done. Very strong. I mean, even with all the things that are going against the car makers right now, chip shortages, there was an announcement that China's factories closures are going to delay shipments and deliveries of many Tesla cars. We'll see the next couple of days if they actually met their numbers. Netflix all-time high yesterday, currently trading at 605. So where is that? 605, right about there. Got up as high as 619. I think yesterday was an all-time closing high, if I'm not mistaken. Closed at, what's the 610? Yeah. All-time closing high for Netflix was yesterday, as people are consuming their you know, all their movies and shows and all that. So pretty cool what's going on with Netflix. Let's see if we have anything else here today, this morning. Looking down my hot list, Sun Power's up 10%. Merck up 8.5% after that pill came out. Interesting. The Limited is doing a snapback right here, but you know, still just ugly looking charts. On the downside, you're getting some hit on these companies. For example, you're probably going to see a hit this morning on, I would say, Moderna, probably getting hit a little bit, down $25. 6.5% of that Merck pill came out, and probably all these other names are going to get hit. Moderna was holding very nicely on its shelf just yesterday, but now trading at $3.59. So where's that? Right here, this next level right here. Got to hold that, or else you're back down to about $3.30. So that's a big move, because now people are going to think they don't need the vaccines, because unvaccinated is what is being helped by this particular new drug by Merck. All right, we're going to end it right there. There goes the market starting up. Moderna is down $30 right now. Markets are holding up really nicely. You have $30 on Moderna. So there you go. The good news, bad news, right, of what's going on here. All right, thanks for joining me. I'll see you again next week.